Hello, everybody. This is Drew Demon, the Devil Stockbroker, coming to you with a live market update for the closing bell for the last half hour of the day on January 24th. Currently, we're looking at the SPY, which is really in an overall bearish trend, like super bearish. I like super ugly, disgusting bearish. I've I I haven't seen a cliff like this since the COVID crash, so that was pretty serious. And we're developing an overall bearish trend here as well. Um, for those who have been tracking our Discord plays and discussions in our analyst floor, we've been actually talking about the overall implications of a housing market crash and things of that nature. If you're interested in discussing those and the finer points of broader markets, the housing market, and the influence that the stock market has on it, and vice versa, feel free to click the link down in the description below to get plugged into the Hell's Trading Floor Discord community. And with that, we'll get straight into the technical analysis. So today, intraday overall, the market dumped again. But what ended up happening, which was supremely interesting to me, was it developed this overall a bullish pattern, which is an inverted head and shoulders. So what you're looking at here, there's a sell-off down here along with this big gap. So we had a sell-off down here to 425-ish, and then a bounce up to 430. This would be the shoulders down here, and this would be the neckline. So if you're looking at this as a overall intraday chart, this is actually a very bullish signal, and you can see that we broke this trend. So ideally, I would have taken a position here at the neckline when I saw that it had broken with this big green candle, and I'm now currently trying to get a fill on some calls for the SPY just to swing into tomorrow, and that's just my rationale. But yeah, this is a risky play because the SPY right now is probably having the worst day that it's ever had. Yeah, C-Dub just said in the Discord, Friday's final hour SPY sell-off was the worst since 1987. Which, if you are not familiar, that's known best as Black Tuesday, um, when the market dumped in 1987 as a result of a massive overall crash in the stock market's trading systems on the exchanges. So I'm trying to get my fill, but it's not filling. And it looks like I might end up missing it. It is beginning to look that way. It looks like I am going to miss it, which is sad. That's actually playing out exactly as I was hoping it would. Oh well. Yep, we're already filling the gap, so unfortunately, nothing you can do. I just couldn't get a fill, and now it's too expensive, so I'm not going to chase. Just the way it is. But that's okay because we made some other really good plays today. Pfizer had a big sell-off going on, and we had a huge gap down. We've been trending down like this for quite a while, and as soon as I had saw the price had crossed this trend line, I immediately took a short bullish position and sold here at the top, right above these support and resistances, and I got out of those calls just for a quick day trade, and whether it was just luck or good timing, got a big sell-off here, and now we're developing another double bottom here in this range that we have. So after I had seen this bounce and this cross on this resistance, I'm taking another position in Pfizer, just because Pfizer has been a really good performer and shown a lot of strength even in a bearish market. Currently, I had already had some 65 debit spreads. That's a call spread, buying $60 calls and selling $65 calls at the same time for the same expiration. And I averaged down on those and ended up opening an additional 8 calls. So I'm still down 65% overall on the position, but because I've averaged down my costs, I now have a better potential for upside. And just so that if anybody is curious, those that don't expire until February 18th. So I'm also looking to, since I missed that SPY gap, and we've now had a double bottom pattern, so bottom, bottom, bounce. I'm going to go ahead and open up some more Pfizer calls. And I'll probably play these a little bit closer, maybe February 4th. This is not an endorsement for the trades that I'm taking or anything of that nature. I'm just trying to make a few swings, keep things interesting. And right now, I like this gap to $53. So if we continue to break trend, or possibly if the market pumps tomorrow, then we could see Pfizer fill that gap and head back up over $53, which would be nice. So I'll go ahead and play that. I'll buy some $53 calls and sell some $54 calls for a single dollar width spread. So I'm buying a call for $53, selling a call for $54. My max profit is if Pfizer goes to above $54 before the expiration. And if I get out of those calls favorably, then I'll have made a big profit. But more than likely, I will get out of those calls as soon as I cross $53 and fill that gap, just because that's when volatility will be highest, and I'll still have plenty of time to exit that position. Let's see. And those are currently 20 cents at the time of recording. So I'll open up 5 of those spreads for 20 cents a piece, which translates to $20 per contract. So for a total of $100. And we'll see if I can get a fill on that. Main thing that you don't want to do is go running headlong into a position, such as with the SPY. Like if I had chased this, then I would have only entered in right here, and I'm risking all this space below me for it to fall down. And you just don't want to do that. It's not a good risk to reward ratio. The time to enter was here at the neckline on this inverse head and shoulders pattern, which it set up really nicely, and obviously it completed its trend, and it's now in the process of filling the gap going into the close, which lately that seems to be how the SPY has been doing. It'll fall down on its ass, and then it'll pump for the rest of the afternoon. It did that here as well. So fell down all day long on January 14th, and then pumped in the last few minutes, and then big gap down. So I don't want to swing these too much. SPY moves all over the place, so got to be careful. Got to know when to take your trades and when to just walk away, just because the setup's not in your favor. It would have profited, but for a day trade like this, I'd rather not play this one and take a risky day trade. Let's talk about Progenity. Progenity is doing some interesting things today. And I know everybody has been really excited to hear about something about this. Unfortunately, there's just not much to talk about. Progenity, we're still waiting on clinical data from all of their research on their Precludia product. But if you notice, Progenity is now establishing a overall bull flag. This trend right here, this is called a bull flag or a bull channel. It's named so because they tend to break upwards. So as soon as we break this resistance line, then that would indicate bullish divergence. So I'm actually going to do something further and tease a fancy little feature that we now have on Hell's trading floor. We actually have a TradingView alert system, which I've been making exceptional use of, and I've really enjoyed this. So just kind of working on on making some new features just to add value to the Discord, and this is one of the fun things that we decided to add in that I thought would be exceptionally useful to everybody. Oh, sorry, stand by 1 second. I am not getting my fill on those calls, and I really want those. There we go. Do as I say, not as I do. Don't chase a fill. Don't chase a bad fill. But I just chased a bad fill. It was only an extra couple cents, but so now I've got a Pfizer call spread for $53 and $54. That's a bullish debit spread, and I got those filled at well, a really bad price compared to where I had set my alerts, but oh well. Anyway, back to what we're doing here. So currently I've got a Discord webhook API that I'm working on here, and I'm actually going to set up some alerts on Progenity whenever it breaks this channel, because that's what I think is going to be the next catalyst, is when it breaks out of this wedge right here. So when that happens, we'll get a really exciting message in the Discord that pops up in we're calling the channel TV alerts. Not everybody can see it just yet. We're still working on it and making sure that we've got everything correct. But everybody who is a professional level and above will be able to subscribe to the TV alerts channel. Professional, just because we've been building out features for the professional tier. The professionals have been offering us some tremendous support in the Discord, and we really haven't offered them anything that I feel is deserving of their kindness and their generosity. So I'm adding some new features to the Discord that'll be available for just the professional tier. Everybody still, veteran and above, still has access to the analysts, of course, but what the analysts will do who have a professional version of TradingView, they'll start adding more stuff to their charts and adding webhooks to the Discord, so everybody can get alerts whenever we break trends like this, and we can let people know, and that'll be an excellent feature, I think. So I'm just setting an alert for both of these. I've been doing these all day long, and gotta say they're a lot of fun. It's been really neat seeing all these alerts flowing through. Let's see. Do we have any questions going right now? Okay, it doesn't look like anybody currently has any questions, but if anybody in the Discord has any questions for me, feel free to just let me know. Anyhow, let's cover Progenity's overall trend. So this is a new bull flag that it's created, and it broke down through its support that it had established on this trend line of two lower lows. So this would have been the bearish breakdown right here. So now that we've entered into this bull channel or this bull flag, what we're waiting for is a breakout above this in order to show that we're breaking out of the bull channel, and then confirmation would be to get above this support line, which has now become resistance. That would indicate a new trend of bullish divergence. What we're also waiting for is volume to come into the stock. Right now, volume is super, super, super low, and the OBV has been reflecting this just as much. The OBV is just flat as a pancake right now. So Yeah, unless some new volume comes into this stock, I'm not trading any more calls. I am just buying shares right now. This is an excellent, excellent time to be buying shares in Progenity. And what I plan to do with those shares is sell some deep out the money calls, and maybe if I have some spare cash, I'll sell some deep in the money, deep out the money puts, but not unless we start showing some bullishness, because we're like, there's only 2 strikes below us, so there's not much profit to be made there. The puts are super cheap right now. Um, but yeah, what we're looking for is 2 breakouts, uptrend, and then this overall downtrend. So I'll go ahead and set an alert on this one too, because I like to be able to see absolutely everything that's going on. There we go. Oh, close the curly brace. There we go. All right, so now we have our levels and our alerts set. So if we break this trend, it'll be bullish, and if we break this trend, it'll be super bullish. All the bullishness. And if you want to learn how to do this in TradingView, TradingView, I have not talked to TradingView yet, but I'm going to talk to TradingView because I love their platform. I've been learning every day on how to use this better and how to make better use of all their different tools and analytics stuff, like their squeeze momentum indicator and things like that. And I'm just like tickled pink at all the features. It's awesome, awesome, awesome tool. Um, let's see, what else can I say about Progenity? Honestly, there's just not been a whole lot, guys. Analysts who are in this chat with me, is there any new DD that I'm not aware of that we haven't discussed to death about Progenity right now? Because at the moment, I'm just not seeing anything new. Let me know if I'm wrong. Okay, I'll take the silence as no. I'm not wrong. Um, yeah, that pretty much does it for the TA on Progenity. Aside from that, the one thing that I will mention is that instead of buying calls for recent, I've actually been opening up leap positions for January. Um, and let me actually go ahead and switch over to another. Let me go switch over to my Firefox here. I want to go take a look at bar chart and inspect some options data. Options. And let me cut my stream over in the Discord. Sorry, guys. So many windows to manage. I'm just going to give you guys the full screen. That way I only have to worry about what OBS Studio is recording. Okay. So, bar chart. Show me Progenity. So this is the other little bit of DD that I'm telling everybody about with Progenity. Progenity is it's a very small. Oh, this is PRO Holdings. Progenity Inc. Trying to show me the wrong ticker. So looking at Progenity, like you see these prices for the near expiration, right? So if you wanted to take an in the money position, like it's pretty expensive compared to the out the money positions. And even though you might go like a few, let's just say next month for February, it's a little expensive at like 32 cents and for the deep in the monies is 75 cents, right? So it's a little bit, it's quite a bit of premium to be paying for such a close expiration on a stock that's in an overall bear trend. So what I've been doing is I've been opening up these January 2024s, and you'll find that like the prices, the difference between the in the monies for February coming up next month is only like 20 cents cheaper than these. So for like $100 per call contract, you can get a deep in the money leap for Progenity for about $1, or $100 per contract, and that guarantees you the right to buy 100 shares at 50 cents a pop. Now, you hold these. Imagine you hold these for the next 2 years. Progenity finally has all of its catalysts, and all the amazingness happens, and all of our wildest dreams come true, and they outpace Dexcom, and all of their products are incredible and profitable, and they capture their $30 billion market. Say all that stuff happens, then Progenity is going to be trading at a much, much, much higher price, and you'll be holding all those calls. So all you have to do is just put up enough cash to be able to buy those shares at 50 cents. So 100 shares, 50 cents. That's $50. $50. You can buy 100 shares. So for every one of these leaps that you buy, all you have to do is save up $50 per contract, and you can get 100 shares each. And whatever it's trading at, doesn't matter if it's trading at 10, 20, 30, 50, 100, doesn't matter. You get them for 50 cents. You're guaranteed that. Now, you might have a hard time finding somebody willing to sell them to you just because there's not a whole lot of liquidity, but I managed to get like 20 of these, and I didn't mind spending $200 for that. That's totally fine with me. $200 for guaranteed uh, getting 1,000 shares of Progenity for $500 is pretty awesome. And I mean, I'm okay with that risk because, like, let's also postulate the worst case scenario. What if Progenity goes belly up or they get delisted? Like, I'm not saying that's what's going to happen, but let's imagine something horrible happened. Like, their head office got hit by a tornado or something. Then, like, you've only risked $500, or well, you've only risked whatever the premium is, so $100 per call contract. So if you get 10 of those calls, that's $1,000 you've risked. But your upside potential is just so much further. So it's a really good way to manage your risk, and that way you're not committing all your capital to shares. Honestly, like everybody else who is predicting a squeeze, like I understand your desire for people to want to buy shares, and I agree with you. Buying shares is what pushes the stock price up, and that's good. But if you're just trying to play this for a long-term investment and you want to hold these until expiration and you want to be with Progenity for life, like that's an awesome way to secure hundreds, if not thousands, of shares for a super cheap price. And all you have to do is just save up enough money to pay $50 per call contract for however many of those you can afford to buy. So whatever you can afford to buy now, if you're able to commit $1,000, great. You just secured yourself 10 of these, or thereabouts, 10 of these leaps, and you set yourself up to buy um, a, 1,000 shares sometime in the future, 2 years from now. So I'll cover a few more plays that we've been working on. So there's been a couple of reversion plays that I've been looking at. NVIDIA is looking strong. So NVIDIA sold off pretty badly. We actually had quite a gap down that happened. But I have been looking at this inverted head and shoulders pattern, and I was watching this pretty much all day in between work meetings. And this was it's a slightly wonky head and shoulders pattern, but you see the neckline right here. Here's the first shoulder, here's the head, and here's the second shoulder. So looking at this overall trend, I was expecting there to be a break. So as soon as I saw it break the neckline here, this was basically what I was looking for. And as soon as it did, look, it's just going on, taking off, and it filled this gap right here. Nice play. I don't recommend chasing it now, and I'm sorry I wasn't able to get on stream to talk to you guys here in the Discord about this one earlier. And I also apologize that I didn't update my trades. There was just too much going on today, and I'm sorry I couldn't get the news out there. I tried to throw out a little update like, hey, NVIDIA is doing really good. Look for an inverted head and shoulders pattern, but that was about all I could do. So if you got in on this, fantastic, ride the trend, and good luck, make your money. But if you're in this now, you're at you're at resistance now. So as a matter of fact, I should be considering getting out of my NVIDIA position. Actually, going to go ahead and look. So yeah, I got smashed because of BBIG. Unfortunately, my calls are like not doing well at all. I have those calls for February, but like right now they're not doing good. So my portfolio looks like like it just threw up all over itself. But through these few day trades with Pfizer and NVIDIA, brought to you courtesy of a few unusual whales prints, they were these NVIDIA prints were beyond super helpful. This was pretty much all I was able to look at in terms of like data that while I was working, and yeah, it looked really well. Pfizer was looking sick for a minute as well, but I'm looking for a reversion on Pfizer next. Also, there's a bit of bearish flow, but looking at the charts, like I see that the volume is turning very bullish. Premiums very bullish. Overall, things are starting to look pretty good for Pfizer. Looking like it's finally maybe going to turn around. So I can say the same thing about NVIDIA. These are just short-term trends. There's no way to know what the overall trend is going to continue to be like for the remainder of the month. Remember, we're in a really, really sick-looking market that's not doing well. Even the SPY is just getting hammered constantly, and we have the Fed meeting on Wednesday that's likely going to create some big swings in volatility. So be on the lookout for that. Oh, I see SPY just turned green. Let's take a look at that. Yep, so look at that. I wish I had taken that position. Man, if I had gotten that fill, then that would have been a really, really good day. I would have easily taken that day trade. That would have made my day. So, like I said, it shows not to chase at right about here, and I don't regret that decision. It's unfortunate. I wish I had got my fill here because I'd be out of the trade right now at a massive profit. But what can you do? If you are in the SPY, congratulations. Ride the trend. Look for consolidation to get out. I'm expecting there to be at least some resistance around here. This is a big point of resistance, this 440 level. So be careful. We don't know what the Fed meeting is going to hold for us on Wednesday, but who knows? Maybe we might see a little bit of a turnaround. But I would also keep in mind that we've got some moving averages that are looking pretty ugly. Let me get my indicators up here. Let me get my extended moving averages out here. So the purple is the 200-day moving average. So everything crossed below the 200-day extended moving average or exponential moving average. That's a really bad signal. The fact that we crossed over that over here and then the market just sold off broadly is a really bad signal of bearishness in the market overall. And like I said, a lot of us in the Discord here are talking about a potential market crash going along with the housing market, and we're going to be waiting to see what comes out of the next few weeks. Obviously, it's not going to be easy to predict these things, but ding, 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 that's the end of the trading day today. I have a little bit of time to cover any other tickers, so if anybody's got some interesting ones. Oh, you know what? Actually, I take that back. Let's look at AMC. I already got this one on my watch list. I drew this falling wedge, or this narrowing downward channel here, and AMC broke below it. And this is a very bearish signal, okay? When it breaks through support, descending support like this, that's a bad sign. But I'm actually kind of excited. Reason is because the OBV still is not moving, and AMC, if you notice, it did move back up. It made a nice little bounce today, and we're ending on a bull hammer. But so AMC's previous trends, this is probably the worst downtrend that AMC's had in its history, and especially since we've been paying close attention to it since December of 2020. But this downward channel here that we are looking at is going to be very significant. So I'm going to draw some tops here. And I'm going to point out that this is a falling wedge here. Now, this overall is a bad sign breaking down below this bull flag, right? So it's showing that overall the trend is very poor. However, a falling wedge like this, especially on a daily candle that's gone on this long, is an extremely bullish sign. This is a bullish signal because these falling wedges tend to break upward, and what we're looking for is for AMC to break out above this. Interestingly enough, if you look a little bit closer, we actually formed a shoulder and a head. So today looks bad, but AMC's OBV has been stagnant ever since June 2nd. We'll actually say like June 17th, but this was the peak of it, back when the OBV was resting at 4.7 billion. And we're at 4.6 billion. Like, the OBV hasn't moved, and the price is still collapsing like this. If you've been watching my my YouTube streams, talking with me in Discord, then you know my stances on looking at the OBV when it comes to predicting squeezes. This is a really significant pattern, and even throughout all of this period here, where AMC had broken into a downtrend, from this point forward, OBV stayed perfectly flat the whole time until suddenly it didn't, and then the OBV created this hill. The same thing happened with BBIG twice, and I know BBIG is looking kind of rough too with the way that it sold off, but BBIG is showing some bullish divergence even now as I speak. So there's these hills. They look small when you look at them in history, but if you look at the way that it played out at the time, this is how the chart would have looked at the time. Then you see this giant vertical scale up in the OBV. That happened here, and you'll notice that the price kept going. So I'm still bullish on BBIG overall because I think that the news has yet to hit, and everything that we saw in the markets was just, one, market makers trying to cover their asses, two, people were leveraging positions to get large long-term call positions or bullish positions to lever up on options, and three, market makers just buried themselves with literally millions of short exempts that are now going to become failures to deliver if they do not cover those at a preferred price. And one more important thing to note on OBV. Sorry, I'm talking actively about BBIG, so I don't want to confuse people. This entire downtrend here, this just huge spike, has been it's been half the volume that BBIG was showing in the run-up. So the OBV is still at about half of its peak. So now if BBIG was truly selling off, then the OBV would be back down here or below it. So that's why I don't think that this is the case. I'm looking for the OBV to make another move upward, and if that's so, then I'm going to take another bullish position. I'm going to get another set of calls, and I'm going to be looking for another big move. What we just saw in these past couple of trading weeks could be the same move that we saw with this huge spike and then a smackdown on BBIG's chart right before the huge run-up. It's all speculation at this point, but I'm still bullish on BBIG because the news hasn't hit yet. There's still a lot of predictions that have not yet come to fruition. And we know that there's certain things that are lining up for BBIG with the release of their Cryptide spinoff, and the dividend to follow is going to mean very good things for the company overall. Back to our conversation on AMC. AMC is doing the same thing that it did back here. There's an overall bearish trend. It had some spikes in the middle, and this one, they didn't have as good a control over it. I credit that to the price of AMC at the time. See, AMC had only a few 100 million shares at the time when this was all going on, and there was a couple dilutions that took place, but this dilution that took place right in the middle of May, right before this big run up, that was a huge catalyst. And the reason why I say that is that dilution adds new real shares into the market, and it requires brokers to accumulate an inventory of those shares. So brokers are part of that buying pressure, and because those are real shares, like they're not actually being shorted in the market, they're being pushed out by the company itself. I believe Short the VIX had a conversation on his channel about this. I'm not sure if it was Short the VIX, but there's been a couple people now talking about this. And notice that right after that dilution had completed, then there was a big run and then a huge green candle, and the OBV made this big lump, consolidated a little bit more, and then finally ran again after the second dilution announcement. And then there was a final one way up here with Mudrick and everything that finally smashed the price in. So unfortunate, but my point is that AMC is now showing that same divergence. We've got 1, 2, 3 hills in the OBV, and this would be a fourth, much shallower one. The reason this price is falling is because shorts are using every available share that they can borrow in order to shove the price down. Short exempts are rising on AMC as well, and options liquidity is being used against the company. However, if the whole reason for this is because the market is in an overall bearish trend, they're taking advantage of the fear and the panic in order to push the price down and make it look like AMC and the IWM are following suit. Keep in mind that most of the shorting is actually targeting the Russell 2000. The Russell IWM is the ETF that AMC is a part of, and it's actually, because of AMC's price, it is the heaviest weight to the IWM. And as a result, whenever AMC gets smashed, IWM gets smashed. When IWM gets smashed, AMC gets smashed. And what market makers have been doing is shorting the ETFs. They've been shorting the ETFs in order to push down these meme stocks. AMC is not the only meme stock that's part of the Russell, but it's definitely the heaviest weighted one. In any case, because the OBV is still lifting, or rather remaining shallow, despite all this downward price action, it just tells me that apes aren't selling. And what I'm going to be looking for is for buyers to come into the stock really quickly. What I'm expecting is, now that the price is so low, that there's likely going to be some covering, because if there is going to be any point where hedge funds, market makers, and everybody who's been naked short on AMC and is so down on their position, this is the best opportunity that they are going to have. And this is like playing chicken with a freight train. If they are not the first one to jump off the tracks, then they may end up getting hit themselves. There's a lineup here of hedge funds and market makers that are looking to cover their positions, unless they can somehow cause AMC to go bankrupt overnight, which just doesn't seem feasible to me. So If AMC starts to push again and we see the OBV lifting, that's the sign that I'm looking for. I'm looking for the OBV to lift sharply. I'm talking about a bump like this one, and relative to this period of time, that's what that bump will look like. If you're imagining that this whole flat line that the OBV was doing, if you suddenly see that big lump, then you know that bullishness is returning to the stock, and you'll see the volume. The volume will be the biggest indicator because it takes volume to move the OBV. If there's not enough volume to move the OBV will continue to stay flat like this. Right now, they are doing absolutely everything that they can to make people panic. Don't give in to that fear response that I keep talking about. Don't give in to the fear response. Push that out of your mind. Remind yourself that there are a ton of naked shorts that have been taken against these positions and these stocks. The most likely point for hedge funds to cover is right when people have just about given up. They're exceptionally good at invoking that fear. If nobody gives into it, they can't cover. So this was the support that they had to break through. Reason why is because it's the last time that there was resistance in the stock before it broke out. They're going to try and push it below this $15 1450 level. This is this was the battle for AMC's price that we had seen before. This is a significant price to a lot of people who have been holding for the absolute longest time, that have been buying AMC shares since before December, have been holding it, and there's so many more that are still in profit to this day because we are above this line. And hedge funds and market makers know this. They want to put pain on everybody who has been invested in this stock for so long. If they can succeed in doing so, they're hoping to invoke a fear response. Don't give in to the fear response. That's the only way that anybody is going to be able to prevail over these guys, just because they're using psychology against us. And they know human psychology better than possibly any other organization or in any other industry aside from psychology itself. They are highly motivated to put people out of their positions so that they can cover their shares. Unless this OBV starts falling off a cliff, I know apes aren't selling. So as long as you're looking at this OBV and you see that it is holding its position here above 4.5 billion, then you know apes aren't selling. And you also know that if they want to cover the positions that they have created, all the new shorts that they created on this downward trend, they are going to have to pay for this every single day. And if they put themselves in a position where, because of the market sell-off or anything like that, where they have completely over-leveraged themselves, the SPY's dumping, all their blue chip stocks are dumping, and they can't keep up their margin requirements, they will be put in a position eventually where they have no choice but to buy out of their shorts, and this will possibly be the best chance they will ever get to do it. But we have to hold this line. Okay. I've gone on for a long time. We're 13 minutes past the bell. Does anybody have any special requests for any additional tickers before I close out the video? Please don't be shy.
Talking about fear and stuff like that, I was just thinking, having a look at the CNN for the Fear and Greed Index, and I thought it was interesting to see the breakdown of it, where you have extreme greed in options and junk bonds, and then extreme fear in volatility, price, market momentum.
Interesting. So I'll have to look at that. Thanks for pointing that out, Dave. So that's called the Fear and Greed Index?
Yeah, it's if you type in Fear and Greed Index, first match that comes up, CNN. Just makes me wonder, seems, obviously the ones that extreme fear are in seem to be the ones that you would imagine be more affected by retail, perhaps. I mean, I'm not an expert in this, so, but I just thought it was
Severe
interesting.
fear and greed indicators. Interesting.
Just thought it
Junk
was
bonds versus investment grade.
just thought it was interesting that they were so, those top two so far one way, and then the others are so far the other.
Wow. That's actually really cool. I've never seen this before. I'll have to go and take a look at this. I want to research this. Maybe see what. Oh man, extreme greed and extreme fear, huh? It's interesting to me that at a point where the market is looking the worst that it ever has, is that now people are really stuck in the middle right now. Like this is almost perfect midpoint. That is interesting. We'll have to look at that sometime. I'd love to. I want to understand it better before I go into too much detail. I don't want to talk about stuff that I don't actually understand, but I'd be very interested to take a look at that further. That's actually really cool.
I'd like to understand it more as well. Just don't take anything I've said about that, to be bullish or bearish or anything, because I'm not an expert in it at all.
Right. All right. Let's take a look at the volatility index request by Verde. So I'm actually not a supremely. Ooh. Okay. Well, there's COVID. So that was the most severe volatility spike that we had ever seen, and of course it was bearish. Bearish volatility is possibly the most severe volatility. Fear is a powerful motivator in human psychology. Fear motivates us to do all kinds of things. Um, so I'm highly interested to see what this new move looks like. I see that these are actually lining up with the September October sell off and also the Thanksgiving sell off that we saw on the SPY. Both of these were big downtrends, so interesting. This actually could be, if you wanted to trade on the VIX, then volatility may be the way to go. Let's see, we've got a few more tickers coming out here. Verde
I,
says
I
that.
wait whenever you got a sec.
Sure, Kat, go ahead.
So IBM just had their earnings about 5 to 10 minutes ago. If you want to take a look at.
Oh, wow, Post, it's 137. That's wild.
Yeah. You know what's the suckiest thing is all of my contracts expired last week.
Oh, no. Dude, I'm sorry.
I couldn't believe it. I was like, oh man, their earnings are gonna suck and they're gonna whatever. But I did get back into a smaller position for just this part. But yeah, like, the bigger chunk of my position was last week, and I was like, dang, should have gave myself more time. That's always the lesson, right?
Oh, yeah, dude.
But
I'm seeing all the people in the chat complaining about all their call contracts expiring in IBM. Dude, I do
I
not
looked at
have.
it just
I feel the pain
Yeah,
for sure.
wow. That's 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 a $10 move in post-market trading just on the earnings announcement. Well, shit.
I
Right.
literally looked at it just before bell, and then I said I don't want to play the gap because it's too expensive, so I chose plug for that.
Well,
Yeah,
I guess we all
Yeah.
learned
could be
something
worse.
today.
Yeah, I mean, I have to know a couple little things before the bell close, just because I know there's going to be some volatility. But I definitely hedge myself, because this next 2 days is just going to be wild. I have a feeling, so I definitely bought some puts along with every call.
Yeah, yeah. If I was to play this at this point, then I would probably be doing credit spreads, honestly, because I would rather be playing the volatility. Um, so if you're doing a credit spread, you're basically betting against the direction of the stock in which you're buying. So if it's a credit call spread, then you're betting on the stock staying below the price that you sold your call for. So you buy a less expensive call at a higher strike and sell a more expensive call at a lower strike. and what you're betting on is that the price will stay below a certain price. So if this goes super volatile, like say it goes to $145, I'm going to call that overbought, and I would probably be opening up a credit spread for, I'd say, like 150 to 148, 147, something like that, because earnings volatility is nuts, and like just seeing what this gap's up to, I would just be looking to see when it approaches that gap again and wait to see if it falls down. But for right now, if you're in IBM, congratulations, and ride out the trend. Good luck tomorrow. And I'm sorry to
Yeah.
everybody else who got closed out of their positions last Friday. That sucks.
Yeah, one thing that will be interesting is that already in post it has broken the larger trend that I was looking for in the original play when it ran up the first time. So if it opened with strength above it, I mean, it might get interesting after that for whoever may be in it or looking to play it in either direction. So
Yeah, that's a good point. If I go back on the 4-hour chart, that would have been this gap right here. So it filled that gap again. It's funny. This
yeah.
actually created a cup and handle, a really, really long cup and handle, but it is a cup and handle. Very interesting. Very, very interesting. Well, I would say set some alerts on this. And Kat, if you wanted to try out the fancy new webhooks that we have for the TV alerts, I would highly encourage you to do your magic with your charting and set some alerts on those.
Yeah, I'd love to. Like if it doesn't hate me this time around, we'll see.
All right. So let's see. C-Dub says XRT held up well relative to the SPY. Put in a nice move this afternoon. XRT. This is S&P Retail ETF. This is the one that GameStop is part of, is it not? I want to say that it's part of GameStop. Yeah, that's interesting. Oh, wow. That volume coming in there. What's the OBV doing? Ooh, interesting. Got some bullish divergence on the OBV. Yeah, this is a good sign. This is actually good overall for this ETF and all the bundle of stocks that are in it. I don't know all of the stocks that are in XRT, but I'm pretty sure GameStop's in it. BBIG moving after hours. Let's take a look at BBIG's after hours chart. Let's drop this down to the 15-minute. Sure is. This is what I was waiting for. See this OBV starting to curl up today? It started moving. I actually bought some additional calls. I sold. Well, let me rephrase that. I had some debit spreads on BBIG. Those debit spreads had an upper strike of $4 of calls that I had sold. I bought $3.50 calls and sold $4 calls. That's a debit spread where I'm betting that the highest that it will go is $4, and that's my max profit. I decided to close those $4 calls. So I bought to close those. And then I took what money I had left and bought some more $3.50 calls. Why did I do that? Because I think that the OBV is lifting. I started to see this move, and I decided that since those calls are good for another week and a half, or 2 weeks, I am just going to go ahead and ride it out. And if those, there were only like 5 cents. It only cost me 5 cents per share on those call contracts that I bought to close. So I was like, sure, why not? $50, I'll close all those out, and I'm out of that position. Now my upside is no longer capped by that $4 position. So if BBIG were to take off unexpectedly, I have my best shot to capitalize on that. So That's another benefit to debit spreads is if you are too early and the price goes down on you and you lose out on some of that price, you can buy to close the calls that you sold and then take that cap off of your position and just go long. If you think that it's going to come back and you've given yourself plenty of time and you see that those calls are super cheap, the premium's really low, you can close out that position, the short side of your leg, and then you just take that cap off of your maximum gain. Let's see, somebody else had a request for another ticker that I think I missed. What was that? It was like something. MTTR. Okay, I don't know anything about MTTR. What's MTTR? Matterport Inc. Oh boy, that's an overall bearish trend, but I like the lift here. See the OBV moving like this? It's starting to look like divergence. The MACD crossed, I think, too. I don't know anything about this company, but what I would be doing is I would be looking for it to break this bull channel. This is a long-term trend. If you see this trend get broken, then that would be my best bet. You saw that there was a break below it, and it consolidated for a while, and then came back into the channel, I should say. So this would have actually been a huge bearish signal, but it consolidated and went back into it. So I don't know. It's an interesting chart. Let's see. This one's been in this channel since December. Yeah, right before Christmas. So yeah, take a look at this one and see what it does. I will go ahead and set an alert on this just because I can. Because why not? And then I'll set another alert for the other side. To the downside. Bearish. And just like that, we've got ourselves some nice nifty little alerts that we can go ahead and let everybody know if we see something interesting. We have not opened those alerts on TradingView or the TradingView alert channel just yet, but we are going to make that available to all members of the professional tier, just because the professionals have been super supportive. Just want to remind everybody, the professionals donate $50 a month, and they've asked almost nothing in return for that, and I want to start giving back something to those extremely supportive members of the community. So if you do want access to those alerts, it's going to only be available for the professionals. And we'll probably be adding some new features pretty soon here for the professionals also. Okay. Lots of talk about BBIG. Everyone's excited about BBIG. I am very, very glad that I closed that short leg because boy, oh boy, does $3 look good to me. $3 is a lovely price to see on BBIG. Seeing it move like this in after hours just gets me all kinds of excited. But right now, the volume's low. The OBV is still not quite lifting, so I'm not adding to any more of my positions just yet. What I'm going to look for is for the OBV to start curling upward again sharply, and I don't think that the price will move too much before it does that. So if we do end up with a big gap up, then, I mean, hey, I've got my positions locked in, and I have no caps on any of my calls, so I feel like my bags are loaded up and the boat is fully loaded as far as I'm concerned. We'll see what happens next week. It is now 4:30 p.m. Eastern Time. Last chance for everybody to put out any other tickers that they want me to look at. I have time for one more. Why does BBIG move after hours? Are they not allowed to short? No, that does not mean that they're not allowed to short after hours. Anybody can short at any time during market hours. The reason why it moves after hours, just because the volume is low and somebody is expecting something big out of it, and that's really the only reason. They could be buying in other markets, in foreign markets that are trading against NYSE or I guess in this case Nasdaq stocks, but there's no particular reason other than just people are buying, and that can happen in regular market hours and it can happen in extended hours trading. BYND, Beyond Meats. Ooh, wow. Beyond Meat did a very interesting thing today. Let's go take a look at this trend. That looks good to me. So Beyond Meats. That looks pretty close to a trend to me. A very shallow down channel. BFRI, I'm sorry, Mr. Head, I'm not currently covering BFRI. Well, I'm not sure what else I can say. Mr. Boulay has all the DD on Beyond Meat. He's been following this one for a while. All I can say is that it's currently bouncing up really hard. This is a hell of a move. It sold off with the market and then bounced up from there, and it's just been lifting, and that's quite exciting to see. So if you're in Beyond Meat and you managed to catch that dip, congratulations. I would be waiting to see what it does when it tests this descending line of resistance and let's see if it exits the bull flag. The next point of resistance on this one, I'm going to set right here. So that'll be, we'll say $63 and that's pretty good actually. $63.36. Yep, that's right on the money. So $36.36, $63.36. Excuse my Lisdexia. The this line of resistance is going to be significant for Beyond Meat. See if it manages to hold its uptrend, and after that, maybe a breakout against this bull flag. We don't know. All right, I will cover BFRI. I remember that this one was heavily shorted. I see that it is continuing its downward channel, so it's continuing down on the bull flag. It briefly popped up with that one wick, so I'm going to ignore that wick. That was a huge volume spike. I don't know what that was about. This looks interesting to me. Let's look at this on the daily chart. Oof. Come on, TradingView, don't show me that. All right. So BFRI, definitely an accumulation. Look at that. Whew. All right. So I'd be looking for consolidation on this one. It may continue down on that channel. This is just a double bottom right here. So it may continue this channel, but it may break out. So if you see a breakout, that would be your buy signal. I will be looking at, let's go back to the 15-minute here. TradingView, can't you like make this a reasonable scale for me? Like automatically? Why do I have to make you? Okay. Yeah, that's definitely a two test, two trading days apart. That's interesting. Okay, so if we see this breakout on Biofrontera Inc., that would actually get my attention. I'm going to go ahead and set an alert on this. So I'm not going to do anything I'm not doing anything on this stock unless I see it break this channel in either direction. This is a heavily shorted stock. It's highly manipulated. As I recall, the short interest was somewhere in the neighborhood of 20%. But I don't quote me on that. I don't actually recall. Okay. So now we've got our alert set on this one. And then final ticker, HTZ, just because we've been looking at this one for a squeeze play, and it also made this big bounce. This is interesting. So we're seeing a lot of the same trends in the market overall, especially for our YOLO swallow plays. That's beginning to look like a breakout. It's really looking close to a breakout. This is a broadening wedge. So it's still a bullish pattern. Not as bullish as a falling wedge because the range extends the further down, the further out you go, but it's really narrow. So it still counts as a bull flag. Right now, it is at resistance in after hours. This is going to be an interesting trend to watch it break. So I'll be watching this one. HTZ, for those who have not been with us, we've actually been watching this one for a squeeze play that we called out with our analytics tool. Sorry, can't think and technical analyze at the same time. Okay, so HTZ. I'm actually going to broaden this out just a little bit more. I want to give myself good confirmation. So if we see this breakout here above $17.50, this is going to be my buy signal. There's a lot of room to go. This thing got shorted to bejesus not long ago, like only a few trading days. And it was interesting because this one's not, to my recollection, trading on any major ETFs or exchange index funds. So I'm not sure why this one would have sold off. It may actually be a sympathy to another ETF that I'm not aware of. And if certain ETFs are being shorted as a part of the meme stock movement, or whatever you'd like to call it, if this is a part of a bundle of stocks that's included with a targeted meme stock that's getting shorted to hell, then this one may be moving in tandem with those. And if covering on those ETFs takes place, then expect this to pump. So we'll be looking for this breakout. If any of the analysts can go ahead and do me a favor, go dig around for any ETFs that HTZ is a part of. This will actually be a pretty significant one to watch. I have a not so small position in HTZ, so of course I have my own biases. But I am expecting some moves here. Let me look. Interesting. Okay, so right now the $40 calls that I sold against HTZ are worthless, so I might be closing those tomorrow. I will be closing those tomorrow. They're only a cent. They are basically worthless. I'm going to close those. So, let's see. I am entirely too over leveraged on HTZ. So don't listen to me. But I am going to probably extend my position in that because I like it. I don't know why I like it. I can't explain to you why I like it, but all I can tell you is that for whatever reason, our Scourge bot has told us that HTZ is being shorted like crazy. Market makers are against it, and they were having a hard time controlling its price action for a long time. And if the stock moves unexpectedly, just suddenly, then I am expecting it to bury them. And I believe, HTZ is a part of several. Okay, so it's part of FPX, ITOT, IYY, ACTX, and UXI. biggest one that it's weighted against is FPX. So let's look at FPX. I have a feeling this is not correct. First Trust U.S. equity opportunities. I'm betting this is it. Yeah, it ain't the Canadian markets. Yes, exactly what I thought. Okay, so this is accurate. This ETF has everything to do with why HTF is moving. Very interesting. There's ACTX as well. Advanced Container Technologies. I don't think this is the ETF. Definitely not. This is an OTC stock. This is a penny stock. ACTX must be in another market that I'm not, that I don't have data for on TradingView. So FPX, First Trust Equity Opportunities.
Time earnings is on Hertz.
Come again?
You don't time the earnings is on Hertz, so it's already come out.
Earnings. That's actually a good question. Doi. HTZ. I literally just forgot the ticker. Yes, that's exactly what you just saw happen.
You go to the daily chart, it says earnings are
February 23rd.
February
it's February
23rd.
Sorry. Thank you. Sorry, I just misread it.
Beautiful. So February 23rd. Interesting. I've got calls for the 18th of February on HTZ. There was a huge print that that hit on unusual whales for $35 on HTZ. It's speculative, but if HTZ is a squeeze play, and it was highly shorted, short exempts were through the roof on it, and it was just interesting. There was a lot of data lining up for it, and also Occam's Phaser on our channel was pointing this one out to us also. He felt that it was worth keeping an eye out for. So I'm going to be doing the same. HTZ, we've got our alerts going, ready to rock and roll. We'll keep an eye on this stock for everybody, and we'll send out any alerts if we see anything significant coming around the pipe. And I think that's going to be it for this market update. Covered a lot of stocks. I'm going to have to go and chop this up, splice it, and make it look pretty for everybody. Thank you all so much for joining us, and have a hell of a time in the markets.